enfim, curtirem um momento diferente, mesmo dentro de casa.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Billionaires in space?
What defines going to space?
There is a level where you
Is
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio. The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here. Have you
Commodities are up.
Keep going.
To the moon.
No.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
I'm fully committed to passing a bipartisan infrastructure bill. Senators should be on notice that the Senate may stay in session through the weekend in order to finish the bipartisan infrastructure bill. And as I've said before, further delays may mean that the Senate will remain in session into the previously scheduled August recess.
Senate Majority Leader there, Chuck Schumer, from New York City this morning. Good morning. Alongside Tom Keene and Lisa Browitz, I'm Jonathan Ferro. Tuesday morning is the price action on the S&P 500. Coming into Tuesday at all-time highs on the S&P and on the NASDAQ too. We are negative 14 points lower by 1/3% on the S&P 500. Firmer Treasury market, a bid into Treasuries. Yields lower by 3 or 4 basis points. We are down to 1.2511, 125.11 on a US 10-year yield. A speech taking place in the last couple of moments, Tom, from the US Defense Secretary Lloyd Austin in Singapore, criticizing China, going on to say, and here's the headline that sticks out for me, Tom, from Secretary Austin, warning against the specter of coercion from rising powers. This going along with something a US official said yesterday, reportedly, to the Chinese, Tom. So this one's starting to build this week.
We stopped the show on economics, finance, investment, and we look at the United States international relations. General Austin in Singapore. John, this is as Duterte fights for his life in Philippines with his final State of the Union address. And what we're talking about here, to go to Anne-Marie Hordern, is the exhaustion of the United States Navy. This is about Austin in Singapore, the USS Nimitz, and Anne-Marie Hordern finally home after 341 days at sea. This is showing the flag, and Anne-Marie Hordern, it costs money.
Yeah, it certainly does, Tom. And I would just say that also optics of this speech right now, as you have Mr. Austin there in Singapore, you have the Deputy Secretary of State, Wendy Sherman, who is in China for talks. And these talks on those heels of the Alaska meeting with China were very acrimonious. So you do see the push from this administration, especially this week. We're also going to have Secretary of State Tony Blinken headed to India, a push towards Asia, making sure we shore up, the United States shores up their allies rise as they try to confront and have a little bit more of this challenge with Beijing.
Does the Biden administration have a cogent South China Sea policy?
What they have right now, Tom, and they are still working on their China policy. We haven't heard as much about the South China Sea, but what you have heard is that one of those Trump tariffs that were put in place have not been taken off. Many were expecting potentially a softer Biden administration when it comes to the trade policies. We still have sanctions on many Chinese officials, and of course, the latest being what's going on in Hong Kong, with the United States telling investors and businesses there that they should be careful when dealing with Hong Kong and issue this this memo basically saying that if you're in Hong Kong, make sure you're aware of what's going on legally with the Chinese Communist Party.
These issues, Anne-Marie, are the epicenter of foreign policy for this administration, as it was for the last one in many ways as well. Also at the epicenter of domestic infrastructure spending, apparently as well. But I haven't heard that for a long, long time. When it comes to infrastructure spending, there was a focus initially on the rising force that is the Chinese economy and the Chinese Communist Party, and what we needed to do at home to protect this economy from that. What does that conversation sound like now?
That conversation is still in focus, John. When you hear the president, especially when he's out touting his infrastructure plan, he will mention we need this to take on and challenge a bigger, more the economic weight of China. When you really heard that in Congress and on the Hills, when they were specifically targeting these Chinese bills in the Senate and in the House, this is when you heard that kind of rhetoric. It's still there lurking, but right now, infrastructure, they're trying to figure out how they're going to pay for it. There's a number of snags that the administration is hitting with Democrats and Republicans to get the bipartisan infrastructure deal done when it comes to transit, when it comes to water. So right now it's a little bit more about the details, not the broader impact of why they want to boost American infrastructure.
And shockingly, they seem to be missing each of their deadlines as they struggle to come to agreements and everything from water policies and spending to public transportation. Anne-Marie, just sticking with domestic policy, I want to get your read on a recent Department of Justice memo following the mask mandates and the vaccination mandates for employees of New York and California. The Department of Justice yesterday came out and said basically, even though this is an emergency approved vaccine, it does not prohibit states from mandating it. Also universities. How significant is this going forward in terms of vaccination policies?
It's just a memo at the moment. It doesn't mean courts need to uphold it. But what you are seeing, and we've talked about this for weeks on this program, what next can be done? If incentives aren't working, what can the federal government actually do? And you also have the Department of Veteran Affairs yesterday having their employees making vaccines mandatory. There is a sea change, I believe, across the country as well as in Washington, D.C., and this just puts pressure on the White House and the Biden administration, which was very hesitant to have a vaccine mandate. Potentially that conversation is going to come back in play.
How important is this for President Biden to get the vaccinations up in order to pass his infrastructure plan, frankly, to garner more support from the public at a time when it's very delicate in terms of freedoms and individual freedoms and trying to move the country forward and recover?
It's much easier for the Biden administration if you have things like the Department of Justice coming out and having this memo, because that puts the onus then on also private employers. This gives private employers and states a little bit more backing and encouragement to do these vaccine mandates, potentially introduce vaccine passports and the likes. Getting people out and vaccinated is probably the biggest concern of this administration. And then second to that would be infrastructure. And you hear both of these being talked about when the president goes out into the country and discusses it. Part of the vaccination program is also people need to get vaccinated to want to get back to work, and infrastructure, hopefully what they want to do is make available more jobs in the country.
Anne-Marie, thank you. Down in Washington, D.C., our Washington correspondent, Anne-Marie Hordern, thank you very much. Let's finish this segment with a bit of optimism around COVID-19 and the trajectory of cases. This came from JP Morgan, Tom. Marko Kolanovic and the team said, quote, with UK cases significantly down over the week, the peak appears to be behind us, which could be a signal for rotation back into value, reflation, and reopening themes. The UK being a case study, maybe a forward look on what could develop here in America too, Tom.
John, this drives me absolutely nuts. Ian Bremmer out with an incredibly important video last night, very courageous video. He's getting a piñata this morning from the unvaccinated. John, this is not about cases. Every pro we talk to says lose cases and analyze hospitalizations and deaths, and particularly right now, hospitalizations, which are basically through the roof.
Tom, I'm with you. And vaccinations are going to be the big push in this country. What is interesting, though, to see how the policy effort develops, where the emphasis is right now, Tom, is not to put more restrictions on the vaccinated, is to do things about the unvaccinated.
So what do you say in the United Kingdom now? What's the distinction, John Farrow, right now between the United Kingdom and the U.S. on unvaccinated?
Look, just in terms of the relationship, and I think this is the important point for the UK, Tom, away from who's been vaccinated, because a good size proportion of that economy has been now, the proportion of the population. Here's the important point. We already saw the relationship between cases and deaths break down in the UK. And the even better news more recently is that cases are totally rolling over in the last 7 days. And that's what we want to see continue. Coming up on the program, Chris Farone, Strategic Head of Technical and Macro Strategy. We'll have that conversation with him on the market and on the pandemic with Johns Hopkins, Amish Adalja. We'll do that a little bit later. From New York, all-time highs into Tuesday. Just a bit softer this morning. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it, because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Live from New York City for our audience worldwide. Let's get a check on a price action for you this morning. Good morning. All-time highs into Tuesday on the S&P 500 and on the NASDAQ. Just a little bit softer this morning. 5-day winning streak. We're about to snap that maybe. We're down about 1/3 of 1% on the S&P. We're down 12, 13 points on the NASDAQ right now, down 17, off by a little more than 1/10 of 1%. It's the Russell of small caps underperforming. But globally, the underperformance, you know where that's coming from. Switch up the board and get to Hong Kong and China. The Hang Seng down and down hard. We were negative by more than 4% at the close. The CSI 300 down another 3.5%. Over the last 3 days, the CSI 300 is down almost 8 percentage points. Just get your head around that. So the question we need to ask is, what is the transmission mechanism for that pain to bleed out into global markets? Right now, we've got a sentiment issue, clearly, but we also have policy risk and not economic growth risks. To be honest, the team at Bloomberg's done a great job on that. Policy risk is very different to growth risk. Are we about to make that transition away from a story that is all about policy and regulation to something that will deliver a little bit more concern around things like economic growth in China that would spill out to the rest of the world and would spill out to global markets too in a more profound way? So switch up the board and get to the bond market. How much does the China story weigh on yields here? 2s, 10s and 30s. They look like this morning. 125.61 on 10s. Yields in another 3 basis points on 30s. Still sub 2% at 190.66. Down another 3 there. Tom, I think that just frames the conversation that people are having this morning. As they wake up, they look at Chinese equities again, and they wonder, why does it matter to me? Why do I care?
Well, it cares to the Secretary of Defense, John, and what's so important here is we see this very real. As John Farrell mentions, folks, we've got the politics folding right in to the interest rate market. I would point out there's a few other things going on as well. The Secretary is speaking in Singapore. The headlines are what you would expect. He says we will not flinch from duties within the South China Sea. But very importantly, one headline, U.S.'s Taiwan work consistent with our one China policy. There is a delicacy, perhaps, of the moment to the north of the South China Sea. Right now, we go to the north. Christopher Rohn, Strategas Head of Technical and Macro Strategy, thrilled that he could join us this morning. Christopher Rohn, you make an immense distinction on this day of Apple, Alphabet, Microsoft earnings, of the odd weighting of the Dow, the odd weighting of always better weighted Standard & Poor's 500. Explain to us this odd weighting and explain what our listeners and viewers should do.
Yeah, I think it's an important distinction, Tom, this difference between the equally weighted S&P versus the cap-weighted S&P. As many of your listeners know, the 5 largest stocks in the S&P are roughly 30% of the entire weight of the index. When you look at the average issue, the equally weighted S&P, it actually has not made a new high since about May 10th. Now, it's right there. It's not terrible. It's not fatal. But I think under the surface, this has been a much more frustrating market over the last 2 or 3 months than just looking at the index would lead you to believe.
And we look, John, here at the technical analysis of the moment, and on radio, what's so important, John, is at least Verone got the beige suit memo.
Did I not get the memo? Was I meant to get the memo? Should I have worn a beige suit?
John, I mean, you should have had a beige suit.
Does Chris know about the man from Del Monte? Does Chris know about the man from Del Monte?
I don't think so.
Should we tell him about that a little bit later? I'll send you an email about that, Chris, a little bit later, and I'll get your thoughts on it. 3M out with some earnings, guys, seeing full-year EPS at $9.70 to $10.10. Previously saw $9.20 to $9.70, the estimate $9.82. So, look, the outlook for so many of these companies, Chris, is better. The outlook's better. We were talking about synchronized global growth at the start of the year. That didn't pan out. And some of these deep cyclical value trades that people thought would play out, the likes of Japan, the likes of EM, really did not. Can we just blame China for that?
Well, I think you need to remember, when you talk about China in particular, it's almost 35% of the EEM, right? So, much like we talk about the equally weighted S&P with the 5 biggest stocks, that's its own problem when it comes to what the Chinese market here does here. So look away from China. India still acts great. Brazil still acts great. Korea's consolidated in an uptrend. So EM away from China actually still acts pretty well here.
Where does Japan fit into that trade at the moment for you, Chris?
I think what's really notable, and we published on this yesterday, some of these Asian consumer cyclicals, many of which are found in Japan, have started to reassert themselves over the last several weeks. I know that almost sounds crazy just given the headlines out of China. Look away from the headlines, look away from China. Asian cyclicals have actually started to turn back up over the last 2 weeks. So have the European cyclicals. It reminds me of last summer. Asian and European cyclicals led the U.S. cyclicals by about 6 weeks. So there seems to be something brewing there in the recatalyzing of that cyclical trade.
What's the strongest correlation in terms of economic data or other inputs that seems to be driving that shift?
Yeah, well, I think at the margin, we have rates that have gone back to levels that we last saw earlier in the year or certainly late last year. And we're of the view that low bond yields catalyze cyclicality, not the other way around. High bond yields kill a recovery or crush cyclicality. This is the exact opposite condition. It reminds us a lot of last summer where 60, 70, 80 basis point 10-year yields last July and last August, we think were instrumental in catalyzing or setting the spark for what would become the cyclical rally of the back half of 2020 and early 21. So we see a similar thing here.
Chris, this is exactly where I wanted to go. This idea that low yields actually pushes people into the riskier sectors because on a risk-adjusted basis, you're going to be getting more income from some of those sectors. The flip side is, what if the bond market is sending us a signal? What if it is sending a bearish indication on the overall economy? That would actually have a negative impact on cyclicals. Can we start to worry about that, or is a lot of the move that we're seeing in bond yields purely driven by technicals, purely driven by the Fed dominance, and frankly, a lack of liquidity in the summertime?
I think, and this is a fair debate, and I think if the message from bonds was about something truly sinister on the economic horizon, I think credit conditions would also be weakening materially here, and we haven't seen that. And the other thing we haven't seen, as bond yields have come down over the last 4 months, you have not gotten even a hint of leadership from either the staples or the utilities. So let's get this right here. Staples underperformed when bond yields were rising the first part of the year, and they've underperformed again as bond yields fell the second part of the year. That's just not leadership from these defensive groups.
Christopher Owen, which FANG has the best chart? I mean, I know you don't talk individual stocks, but nobody's watching today because we're wearing beige suits. Which FANG has the best chart?
I think the Microsoft chart has consistently been the best of these FANG names. I'm a little curious here about Apple. Apple has not made new relative highs versus the S&P. It's one of the only FANG charts that has not. The weakest of the FANG charts has been Netflix here. That remains the case. We think Netflix is putting in a big top. So I think at the margin, there actually is some distinction being paid among some of these names. And then, when you look away from the big FANGs, then there's a whole other group of stocks that we call the baby FANGs, right? It's all the aspirational FANG stocks. Those actually have not kept pace with some of the bigger names over the last several months.
Does that go to cash flow? Do your charts in summation to bring it over to fundamentals say profits and quality matter right now?
Well, my colleague Jason Trenner did some really good work yesterday looking at the FANG names, which control about 30% of the cash of the entire S&P. So I think there's a pretty valid argument to make. If you're looking for cash or cash exposure, the FANG names, given that they're 30% of the S&P cash, is not a bad way to do that.
Before we let you go, Chris, let's talk about the financials briefly. Huge focus for so many people. And for the majority, I would say, of guests that come on this show and talk about the cyclical trade, they're overweight, the banks. Can we get it done with yields down here, 125 on 10s, Chris?
You know what I think is interesting? You've seen a bit of a flush in sentiment, and we look at that through the lens of fund flows. If you look at ETF flows into the XLF, the financials ETF, back in March and April, they were super aggressive. Everyone was just a convicted financial bull. We've seen a liquidation in financial flows in the months that have followed. And, look, last week, you almost had a very significant outflow from the bank names. You had a surge in the number of stocks making new lows in that group. You put those two factors together, it often means you're in the ballpark or in the zip code of a pretty good tradable bottom in banks. So I think we're close there, John.
Interesting. Chris, good to catch up. Send our best to Jason. It's been way too long. Chris Ferrone there, Strategas Head of Technical and Macro Strategy.
He wears a beige suit.
He can he? Is that the entry fee?
That's the entry fee.
You're paying up big time if you're wearing that on there, Tom. We'll move on from that quickly. Earnings coming up a little bit later after the close. Apple, Microsoft, and Alphabet, and then Amazon later in the week. Facebook Wednesday, Tom. That's exciting.
Yeah, seriously. I mean, it's going to be an interesting week of earnings. David Wilson leading our coverage. John, how much did we miss Lisa? The pendulum of bearish indication.
I know. How bearish bearish did that get and how quickly did it get bearish?
Oh, come on. Look,
Record highs, Lisa.
Okay, yes.
Tuesday morning, 5-day winning streak on the S&P. Get happy.
and the question is, why then is a 10-year Treasury yield at 1.2%?
Oh, here we go.
No, in all honesty, if this is an indication on the economic outlook, it is bearish, period, full stop. If it is not, then what's it an indication of?
Perhaps that's why the Nasdaq's at record highs, because we're at 125.11.
Exactly. All right, man from Del Monte, you can speak.
Thank you.
This is going to go well today, isn't it? Do you know, I heard a rumor a little bit earlier this morning, Tom, that maybe I'll be joining you for the Fed show tomorrow afternoon. Given how this is going this morning, I'm having a rethink. I'm having a rethink, Tom, whether I'm going to join you. Look, I will be joining you. Be the three of us driving a coverage of the Federal Reserve decision, Chairman Powell News Conference.
Nice, Segui.
And I think for many people, Tom,
just brilliant.
I'm trying to move on quickly.
Please.
For many people, they believe the Fed has the space, the reasons of piling up to take a punt, and wait.
Yeah, nobody cares. All they care about is McKee has a beige suit. So
well, McKee does actually have a beige suit.
He'll probably not get the last question in the press conference.
He's going to keep dragging you back.
This is going to be the longest market check I've done in quite a while, so let me get straight to it. Just to wrap up this. Your equity market, 5-day winning streak into Tuesday on the S&P 500, all-time highs
60 seconds.
on both the S&P and the Nasdaq. I think I've got to stretch it another 30, Lisa. 124.94 on 10s. Yields come in 4 basis points. The story is about stress in China. The question people have stateside as we wake up this morning in New York and beyond, what does it mean for me? What is the transmission mechanism for that stress to bleed out into risk sentiment more broadly? In the FX market, euro dollar 117.86, we're negative 0.14%. For our audience worldwide, with some tension between Tom Keene and Lisa Browitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Laura Wright. Wall Street is stepping up the pressure on Congress over the infrastructure package. The heads of BlackRock, Blackstone Group and Morgan Stanley are among the CEOs who wrote to congressional leaders urging them to swiftly pass the measure. More than 140 executives signed the letter. Meanwhile, Senate talks suffered a setback. Republicans rejected an offer from Democrats meant to address all outstanding issues. New back-to-the-office mandates from California and New York City. California will require all state employees to prove they're vaccinated or wear a mask in the office and get tested for the coronavirus at least once a week. New York City is doing the same for its municipal workers. Second quarter earnings at United Parcel Service beat expectations. The package shipper is sticking with its capital allocation plan for 2021. That's likely to be a relief for investors who were spooked by FedEx's plans to spend heavily on beefing up capacity. Bitcoin fell after briefly trading above $40,000. Amazon denied that its job posting for a digital currency executive meant that it will start accepting the world's largest cryptocurrency for payments this year. Investors rushing to cover bearish bets had fueled the earlier rally that drove Bitcoin up 17% at one point yesterday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
If inflation did seem to be persistent, the Fed wouldn't hesitate to act, and that you have the tools to deal with inflation. What do you say to critics on Wall Street who say, yes, you have the tool to deal with inflation, you raise interest rates, and then historically plunge the economy into recession?
Yeah, that's exactly the kind of logic, I think, that you want to avoid, that you get too far out of alignment with what's actually happening in the economy, and then you really have to react more strongly than you'd like, and possibly causing disruption in the economy. So you don't want to be in that situation. I think the risk management here is that if inflation does come back down in 2022, we're in great position for that. We're exactly positioned for that. But if it doesn't, we're not in such great position. So I think for that reason, we want to have some flexibility on this taper.
Went up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
For the people here on Earth who are wondering, why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Wednesday, the Fed decides. How worried are they about inflation? What will they signal about tapering? Coverage begins at 1:30 p.m. Eastern on Bloomberg Television and Radio.
We've lost over 600,000 people, in large part because we didn't have vaccines. But going forward, anyone we lose is due to stupidity. It's due to political failure of our government, of our leaders. If no one else is going to say it, I'm going to say it. I believe that saving those tens of thousands or hundreds of thousands of lives is worth a vaccine mandate.
The outspoken Ian Bremmer there, G0 Media founder, in a video posted online in the past 24 hours. And typically we'd move on, do a market check quickly, Tom, but I don't think we should do that following those comments. That right there gets to the heart of the debate right now in this country and in others too.
And it folds into the Fed meeting tomorrow with our coverage. You'll see that tomorrow in the 2 o'clock-ish vicinity. Right now, off of Dr. Bremmer's comments, Dr. Amish Adalja with Johns Hopkins Center for Health Security. I need to talk to you, Doctor, about the medicine realities within democracy and liberty. Ian Bremmer is talking from a political aspect. You represent the medical aspect. Can you succeed at your medicine amid American democracy and our definition of American liberty?
Yes, I think we can. And I think if you're talking about vaccine mandates, I think it's one thing for the government to mandate it. I think that's very difficult and doesn't usually happen. But we've got so many private organizations, employers, schools, things, transportation companies, where I do think it's justified for mandates, including in my own industry, where we're struggling to get nurses, for example, vaccinated. So I do think that when we institute mandates, you see vaccination rates go up. And I think it illustrates confidence in the vaccines because they are safe and effective. This should be a non-controversial vaccine.
Why are selected nurses afraid to be vaccinated?
It's unclear to me because 96% plus of doctors are vaccinated. But when you go to nurses, it's maybe in some hospitals 50%. And it's likely because they've swallowed misinformation, at least from my personal experience talking to some of these nurses. They've seen something on Facebook, specifically things about fertility, things about this being experimental. And there are some people who believe these ideas about microchips and 5G as well, which is kind of surprising. But it's taken hold. And I think the nursing unions have kind of given them cover and have blocked administrators from or at least scared off administrators from mandating the vaccines, but more and more of them are going to do it. And I think once we get full FDA approval, I think it's really going to be universal. I think the VA steps yesterday, as well as other organizations, are going to make it the norm that healthcare workers should be vaccinated. And I think that's what it should be, because it's a professional obligation. And I was one of the first people to get vaccinated the minute I could before Christmas.
Amish, some people might say this is an overly narrow or complicated issue at this time of the day, but I feel like this goes to the heart of the issue, and that is the Department of Justice and the memo that they put out yesterday basically saying that even though this vaccine only has emergency authorization, that doesn't necessarily mean that employers and that universities cannot mandate that people get vaccinated. This sort of goes to the heart of the issue of legal immunity for entities that decide to create some sort of vaccination mandates. How important is it for the government to lead on this issue?
It's important that the government give these companies assurance, because they were kind of brought into this by the government's request through Operation Warp Speed. And often during pandemics, when there's a public health emergency, there are indemnifications done for those companies in order to get them to make this vaccine, because they have to do it quickly, they have to do it in an expeditious manner, and there is some uncertainty. And this is what happened during the 1976 swine flu. It happened during 2009 H1N1 pandemic. So I think it is important that the government say that these companies are going to be indemnified, because we're in a basically this is a government-run program in order to curtail this pandemic. I don't think that there's going to be that many lawsuits, though, because when you look at the safety and efficacy of these vaccines, they're really off the charts when it comes to any vaccines that humans have ever created.
So then why haven't these vaccines gotten full authorization? Why do we still have an asterisk around them at a time when there is such efficacy rates? And why is it that kids under the age of 12 cannot get vaccinated?
So the emergency use authorization was necessary because in order for the FDA to approve a vaccine, they need 6 months of data. That's just sort of what they do. So Pfizer recently crossed that threshold. They've applied now for priority review. It's likely to happen faster than the 6 months that they have during a priority review, but it is something that I think we should do faster and quicker, because we know that this is holding up many places from mandating the vaccines, and it's giving anti-vaccine activists a talking point, calling it experimental, even though emergency use authorizations have been around for a long time, and we used them during H1N1 and during Zika. I think that we're going to see children approved below the age of 12, but it's important that we do the studies, because we're trying to make sure that this is safe and effective, that the risk-benefit ratio favors the vaccine in that age group. Because remember, as you get to those younger age groups, the risk of severe disease falls to very low levels, lower than influenza for a child less than 12 years of age. So we want to get it right. We want to get the dosing right. Hopefully this will be something that we see probably in late fall, early winter.
Dr. Adelj, on a game theory basis, it seems to be that the medical community is drowning in success. It's a miracle that we got the mRNA vaccines done so quickly. Is most of the angst right now because this is all happening so fast, unlike a slower process of previous pandemics?
It may be part of it, because mRNA vaccines do give you that great advantage to make a vaccine candidate within hours or weeks and then move into clinical trials quickly. And I think that the lightning speed of this, which was one of the advantages of mRNA vaccines, has been something that people have exploited to say this happened too quickly. But you imagine if we were still waiting the old way for a new vaccine, how many more hundreds of thousands of people would have died in the United States? How many illnesses would have happened? So I think that the speed of the mRNA vaccines is what makes them the most attractive thing about them, and it's probably going to change the way we face infectious disease outbreaks in the future forever. It's a huge advantage we now have as humans against the viral kingdom.
Doctor, we appreciate your time, and thank you very much for your hard work, sir. Joining us at the end of a very long shift, I'm sure. Dr. Amish Adelj there, Johns Hopkins Center for Health Security Senior Scholar. Here's the shape of the market right now. On the equity market in the United States of America, the S&P 500 -10, down about 0.2% on the S&P. You can focus on COVID cases, you can focus on the stress in a handful of Chinese names, or more broadly the Chinese equity market at the moment, or you can take a look at the earnings coming out of America this morning.
Yes, you can.
UPS topping estimates, international sales soaring 30%, GE EPS better, revenue beating expectations, 3M boosting third quarter outlook after EPS beat. That's beats across the board here, Tom. Going into big tech a little bit later.
Yeah, well, Jim Cramer over at the Death Star features that, as well as John Farrow here in Nirvana. And John, I think you and Cramer are absolutely correct. This is about the earnings. And what's interesting here, John, these are essentially as a generalization, diversified American non-technology companies. And they're giving a nice oomph as we go to the afternoon and the technology extravaganza.
The earnings are always better than expected. Let's be clear about that. But the earnings are good, Lisa. They're better. The outlook is brighter. The C-suite seems to have some confidence to raise the outlook when last year they couldn't even give us an outlook. There's a difference there, a massive difference.
You're going to call me a bear for this, but I'm going to cite Lori Calvasina. So I'm going to say that she's the bear. And people are looking at the pace of upgrades to earnings per share forecasts, and that actually is starting to slow. And that perhaps is what's underpinning some of the cautious response to some of these beats.
I like Lori. I'm not going to call you a bear.
She's fabulous.
I feel like if I say anything or criticize you, I'm criticizing Lori now. That's a great defense.
Isn't it?
Well done, Lisa.
I have no idea what just happened there.
Lisa
Lori
Bramwitz.
Calvasina is a bear? Is that what we're saying?
Tom Keene. I think that's what Lisa's trying to say.
No, I was saying this was her argument.
With Jonathan Ferro on radio and TV.
Lori Calvasina
This
is a bear.
is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're already in that decelerating upward revision pace, and about half the sectors are contributing to that right now.
A slowdown of some degree is not necessarily a terrible thing for the economy as a whole.
If there's not as much slack in the labor market, inflation could still potentially be stubbornly